Imagine locking in a mortgage that goes so long, your future grandchildren might be the ones making the final payment. Kind of mind blowing, don't you think?
Crazy, crazy.
Yeah. Well, that's exactly what has been on top of everybody's news feed who is looking at mortgages and the markets and seeing what they're doing. The 50-year mortgage. How do you feel about that, man?
Sounds like a trap.
It's a
I
trap.
don't I mean, I think the first thing that gets stuck into my head is like 50 years. I don't even know if like people even, no offense, but I don't know if people even stay married for that long for some people. You throw this
That's a
number
good
out there.
point.
Yeah,
That's a
you throw
really good point.
yeah, and then you throw
Yeah.
this number out there. It's just sounds intimidating is I guess what I'm trying to get at. Sounds intimidating.
It sounds intimidating. Honestly, I think of like my brain cannot even comprehend that that range of time, like 50 years from now or 50 years getting locked in financially to something that's supposed to happen over a 50-year period is kind of hard to comprehend at the same time.
Yeah, totally. And when I was like doing a little bit of the research for this episode, looking into it, it it was interesting to see why they came up with it.
Hmm.
So I'm not sure if you got a chance to see any of that. Like, how did this idea even came about, and like who does it actually benefit? Because the government is apparently coming up with this for a reason, right? This option for a reason.
Hmm.
So who is it benefiting, and why are they think why do they think this is a good idea, right? So
Hmm.
did you get a chance to see a little bit how they came up with this?
Yes, I did see kind of what the backstory was on this, and really, from what I gather, this is a strategy, right? It's a strategy uh,
Yeah.
to make housing more affordable for the benefit of some people behind the scenes. Let's just say that. I think that it does help in the short term in terms of monthly living expense, right? Because again, we kind of talked about this in the first episode. You can fix your monthly living expense based upon whatever type of mortgage you go into. But what does that also mean for you long term? Like, what is the actual cost for you to do this type of mortgage? And are you really coming out ahead depending on how long you intend to stay in this product? Are you really going to stay in this product for 50 years? And that's what people really need to kind of take into account when they're considering an option like this, right?
It's not only long term, it's 50 years long term. So it's a big decision. Sorry, I got some people moving stuff, so it might be some noise in the
What you pushing back there, Vin? You pushing weight back there or what? They just chopping it up over there?
so I house hack my place.
Oh,
So and
nice.
so what that means to people out there is that I basically rent out my rooms.
Yeah, that's another episode all within itself. We'll have to get into that.
Exactly. So it's a good way to, help myself pay the mortgage.
Hmm.
But, sometimes I gotta deal with a little bit of noise.
Hey, sometimes it's lonely when it's too quiet, so that's all good.
Kind of a side note, it's funny because I'll get a lot of my clients, and particularly a lot of my clients from India, when we're
Hmm.
looking at homes, and like let's say it's like a house on a busy road or something like that, or
Hmm.
like a main street. I'm always telling my clients who are Indian in this situation,
Hmm.
it's a little loud, and a lot of times people pay a little bit less for a home like this because it's a little bit less desirable, a little bit more
Hmm.
loud, and people prefer quiet. And a
Hmm.
lot of my clients who just came from India looking for a home, they're like, really? I'll pay more for this because they're not used to it being so quiet, and like a lot of the cities back where a lot of we're getting these engineers coming from, like
Hmm.
Mumbai and Bangladesh, like it's super super loud. So my clients from those areas are always like, yeah, can you find me a place that has some traffic noise or some like people like a lot of people around? Yeah.
Some proof of life with noise, please. We don't want it quiet.
Exactly. But sorry, before we got onto that tangent, I wanted to kind of get into the history of how we even got here to this 50-year mortgage.
Hmm.
Do you happen to know how we got into or we got a 30-year mortgage?
I mean, I don't fully know the background of it. Main thing, and we'll probably circle back on this, is that this is a solution that has been proposed that doesn't necessarily solve the crisis we are in when it comes to
Totally.
one, affordable housing, and two, inventory. Because we know that affordability is great because it unlocks home ownership for more people. However, if we don't have the homes to be there for them to purchase because they can afford it, how effective is this strategy in solving the overall issue that we're having with the access to home ownership through inventory and affordability?
I think you nailed it right on the head because looking at it, this is supposed to be a solution, but it's more like a band-aid because
Mhm,
it's making housing a little bit more affordable. And we'll get into how it does that. But yeah, the gist of it is making the monthly payments more affordable. But when the problem that we really have is a housing supply issue. And that's why
agree.
housing gets so expensive because we don't have any houses to even really curb the demand.
Mhm,
So that's why prices keep going up. Even when you come up with these band-aid solutions, it's not fixing the real problem.
mhm,
But
agree.
I found it a little interesting on even how we got to the 30-year mortgage in the first place because I was like, 50 years, yeah, it sounds crazy. But then I thought about it. How did we even come up to the 30-year anyways? Like, how did we come up with the 30-year mortgage at
Mhm,
all? I saw that. So back back before the roaring 20s, I saw that um how to buy a house is, yeah, you would get a mortgage, but the terms during those years were like 3 to 10 years
mhm,
and they were interest only payments. So you wouldn't even pay down your principal, what you owed to the bank, until you paid off the interest. And then you get
mhm,
this big balloon payment at the end.
mhm,
So that made it super difficult for people to basically buy a home. And then the Great Depression came and
mhm,
then millions of people lost their homes. So in that time, that's when they came up with the 30-year mortgage. Basically, same deal to help people be able to buy homes because
mhm,
affordability, right? And we're having similar issue right now like we were talking earlier, it's a similar issue, but it's mainly because of supply. If we had more supply, prices would be down. But
mhm.
I just thought it was interesting that it was like, coming like how do we even get to this point at all? And the 30-year was a solution and a good solution as we come to find out now.
Mhm.
But yeah, I guess what other thoughts do you have about it? Like, do you think this does have any benefit for anybody?
Think on the surface, right, it looks very attractable. I can see people being drawn to this as, oh, yes, this is going to help solve affordability, at least, even at the most minor sense of it, right? Because it will decrease the monthly payment. But long term wise, does it really solve the affordability issue? What are the actual costs of obtaining a mortgage like this? I mean, if you take a look at different financial products that are available for mortgages, typically, you have your adjustable rate mortgages, which have more favorable interest rate than your fixed rate 30-year loans, right?
Yeah.
So that leads you to think that, hey, these 50-year mortgages, the pricing on them is going to be expensive, even if, or the cost to do them, even if it equates to a lower monthly payment for you. What are going to be the fees associated with doing this type of loan? Because
Yeah.
when you borrow money for a mortgage from a bank, you are paying more than just the interest rate.
Mhm.
You are paying fees to do the overall loan as well,
Yeah.
right? And
Yeah.
then beyond that, what are the repercussions for the financial markets? Because lenders, they lend out money. They will keep some of them on their books, but then they also sell them on a secondary market to
Mhm.
investors. What is the appetite for this type of lending product on the investor side, right? And all of that will play into what is the cost to do this loan. Now,
Mhm.
one thing I find very interesting is that most people don't stay in their mortgage. I mean, even if you have a 30-year mortgage, it's probably more rare than not that you actually stay in that mortgage for the life of that loan.
Yeah.
Because this thing called life, as I say to everybody, every time something goes awry, I tell everybody, well, that's life. Every time life happens, right?
Yeah.
In our personal day to days, that adjusts, our long term goals, where we're going to live, if we're going to accept a job, if maybe our family's downsizing, upsizing, and whatnot. So realistically, we don't stay in these mortgage products for a long period of time, anyways. That kind of had me thinking, well, then maybe if you're not going to be in a 50-year mortgage for 50 years, and you're going to use it as a strategic move to get into a property, lower your monthly living expense with the lower payment, and then wait for more favorable mortgage options to become available, whether that's in interest rates or otherwise, change financial products. And at that point, then maybe it doesn't matter, right?
Yeah.
So I think it's an issue that's not a just here's the answer. I think there's many layers to it personally.
Yeah,
What do you
no,
think?
I agree. I agree. I think the benefit or yeah, the benefit of the 50-year mortgage, and I'm gonna play around and start sharing screens here just
Okay.
so I follow this really informative YouTube channel called Value Credit. I forget what it's called now. Clear Value Tax. That's what it
Mhm.
is. But it's just this financial guy. But he brought up really great points that I thought I could share with you guys as well, which is the benefit of the 50-year mortgage. And you see that the payment for a 30-year mortgage and a 50-year mortgage, right? On a 415K home with a 10% down at a normal interest rate these days around low sixes, right?
Mhm.
You're looking at about 2,200, 20, almost 2,300 with a 30-year mortgage and $2,000 with a 50-year mortgage. And I don't know about you, but to tack on 20 more years for a difference of $200, maybe $300 on my payment, it doesn't sound worth it to me, right?
Yeah, yeah. I mean, I agree. When you're looking at it like that, you're kind of like, I don't
Right.
know that that necessarily makes sense.
Yeah, but I was also thinking after when you were talking about how yeah, like none of our clients, at least what I see is like people move maybe 2 or 3 times in their lifetime,
Mhm.
like minimum, right? So meaning they won't maybe stay in that house for the 50 years and they yeah, they won't need that house for 50 years. So maybe the lower payment might be more beneficial for them.
Mhm.
But when the year or when the loan term is like depending on the loan term, the shorter amount, the interest is lower, and
Mhm.
the higher the mortgage term, the interest is higher. Is
Mhm.
that right?
Yeah.
Because like
From
on
a
a
general
10-year,
standpoint. Mhm.
yeah, yeah. So basically what I'm getting at is that yeah, your payment is gonna be more stable or like more it's lower. Sorry. I'm trying to
Yeah,
pull
you're
up some
good.
screenshots. But the interest you end up paying is a lot more the longer you just keep that loan, right? Because you can
Mhm.
see from this screenshot, if you kept it for the 30 years, it's 500K. And if you kept it for 50 years, it's double that.
Mhm.
And if we were talking like, well, if you don't sell it, I mean, if you sell it before the 50 years, then obviously you don't have to pay as much interest, but the pay down of your equity is basically going nowhere.
Right.
So
You're really stalled out.
you're really stalled out. So unless you bought a
Yeah.
house in an area where it's appreciating like crazy, then that way
Mhm.
you can at whatever point sell it and hopefully the profit of that sale is worth it for you for how many ever years you stayed in there and how much of the interest that you paid that you're positive.
Mhm.
But I don't know, one thing we always talk to clients about with real estate is don't time the market.
Right.
So I don't know, just kind of seeing this YouTube and it pointed out some of these factors, it kind of opened my eyes like, wow, yeah, 50 years, it could be good, but also you got to know what you're getting yourself into.
Yeah, you have to be realistic, right, about it. So that's why I think on the surface, you look at it and you're like, oh, yeah, great. This does help affordability, less money coming out of the pocket every month. But also, what is the entire picture here? Like, what does this product really mean if it is utilized for its entire duration, right? Does it
Hmm.
really make sense financially to have this type of product or to utilize it if you're planning on being on it long term? I mean, and realistically, 50 years, again, you got to be pretty sure that you would even be willing to commit to something like that for 50 years. And life tells us that that's unrealistic, right? Like we said,
Yeah.
people move, circumstances change and whatnot. And people don't stay in their 30-year mortgages for 30 years. There was such a funny time where people, and we still talk about it now, well, these people locked up in their 30-year mortgages, 3%, at these really historically low interest rates, and they're never moving out. They're never going
Hmm.
to leave. Why would they leave? Well, guess what? Life
Life
happens.
happens.
And guess what? More important things start to happen in your life. And there are certain situations that you you might not have a choice. You need to walk away from that interest rate and life will continue to go on, right? And so I think mortgages, depending on what your goal is with your home purchase, should be used strategically to help you accomplish whatever you're trying to accomplish, whether it's your first time home purchase or it's your forever home. So calculating the overall cost is an important part of that.
Yeah, no, I think you're totally right. And even when I was watching the YouTube video and how it was talking about most people fall into the trap of thinking about just their monthly payment, but they're not
Hmm.
thinking about the long term.
Hmm.
I can definitely relate to that because, I think everybody's just thinking short term, like, can I make this payment now? But like, you're not thinking about if I had to be there for the next 10, 7, 10, 15 years. And like you said, life happens.
Hmm.
And at that point, if you're trying to sell the house, but you didn't pay off as much equity down since you've been just
Yeah,
paying the interest, and by the time you sell, it hasn't appreciated enough for you to even take anything away to
that's right.
be able to buy out that next house because life happened,
Hmm.
then you're SOL.
Yeah, basically. I think that's probably one of the biggest downsides of a product like this is that you do stall out in terms of accruing equity because you need to pay, you're going to be paying interest first and foremost, right?
Hmm.
And then
Hmm.
you partner that with the housing market is always fluctuating. And you have a lot of people who have a lot of opinions. Market's going up, market's going down, market's going to crash, market's going to go up. But the truth of the matter is that nobody has a crystal ball. If somebody tells you they know what's going to happen, please let me know so I can talk to them. I want to see their crystal ball. But
That's so fun.
if you're not paying down that debt and you're paying interest first and foremost, you're definitely not accruing equity. And that can be especially true in certain markets here in the United States. We live in Silicon Valley. Property here has seen accelerated appreciation, but guess what? We've also seen decelerated appreciation, as I'm sure you've seen as well, Dane. So it's something to
Yeah.
be aware of as well when you're considering
Yeah.
mortgage products.
No, I agree. I think, most people get into real estate or buying their first house because obviously they need the space, but
Mhm.
also it's the American dream, right? That's why people come to America so that they can work hard and be able to buy a house. And like a lot of those people live the American dream because the house is tied to their wealth,
Mhm.
right? And by the time they're able to pay down their house and own their house outright, that's what makes them millionaires. And I feel like that's a big part of the American dream, that you've got the wealth.
Mhm.
And when you're doing a product like this and where your equity is possibly tied up because you're in an area where it doesn't appreciate and you're still paying down
Yeah.
this thing, then you're not getting that wealth. Really, you're still just a renter, right?
Right. It actually takes home ownership depending on what the market is doing, and it can have the opposite effect, right, on your
Hmm.
financial health. It cannot necessarily be a positive thing, but it can be a very negative thing if you are in a product like this, the market turns and you're
Yeah.
not informed. That's the
Yeah.
biggest thing. Be informed about all of these other external factors to consider when thinking about what mortgage product you want to utilize to access home ownership.
Yep, totally, totally. Yeah, you're trying to buy a house to not rent from the landlord, but now you're renting
100%.
from the bank.
Right.
So
You don't
it's like,
want to.
uh, yeah, I think this is pretty good stuff because even as a real estate professional, when I first heard about this, I was like, oh wow, 50-year mortgage, and didn't really know the positives or negatives about it, to be honest.
Mhm.
And because we were going to talk about this, did a little bit more research and looked into the nitty gritty and did find like, it's not as cool as some people may think it would be,
Mhm.
just because the price difference, monthly mortgage payment you pay is not so different, but you're tacking on all these years to your mortgage.
And that's outside what the interest rate is, what the fees are to do the loan as well. So
Mhm.
these are all amount to the cost that you pay for
Yeah.
this product. So you really do have to be aware of what that entails. So then you can strategically decide which product am I going to use based upon what my goal is with this house. If I'm going to be buying a condo and I know I'm going to be there, my goal is 5 to 7 years or maybe,
Mhm.
in that range, then I know I need to utilize a product that's going to serve me for that purpose. And maybe I
Yeah.
have to pay a little bit more in fees, or maybe I have to pay a higher interest rate, but it's okay because this is my next step and it makes sense for my next step. So,
Right. Yeah. No, when I was looking at all this, it reminded me of my 20s where I was financing a lot of cars basically.
mhm.
And it's, not the same type of product, but it's kind of the same concept. So, in my 20s, I was making a little bit of money, right? But like nothing crazy, but enough for me to like put some down payments on some nice cars or something, right?
Yeah, yeah. I'm guilty of that too when I was
Right?
younger.
I
Yeah.
think, it's a very common thing. And when you're going into it, you're like, okay, I can't pay off the car, but I'm going to take out a loan. And they always give you the option of, 3 year, 5 year, or 7 year, right?
Mhm.
And I've always done 5 years, but I've always looked at the 7 year because I'm like, oh man, the payments are like hella less, right?
What else could I be doing to the car if I had that extra money in my pocket? Yeah, we've all been
Right?
there. Yep.
Right? But it's like you're just tacking on 2 more years to the loan term. But
Yeah,
you know how cars are. They don't have the resale value as like homes do.
that's for sure. And you're gonna want a new car before that term is up. I guarantee that.
Exactly. Exactly. So even at the 5 year mark, I've always ended up, I feel like, taking a bigger loss than I should have because
Mhm.
by the time the 5th year came around and I paid off the car,
Mhm.
obviously going on to sell it, I'm not gonna get the same amount that I
100.
bought it for, right? So think about having a 7 year car loan. You added 2 extra years of depreciation to the car, so you
Yeah.
basically lost more. So if you're when you're trying to recuperate to buy that next car, you're not getting as much back. You know what I
Yeah,
mean?
yeah. It all
So
goes into looking at the whole picture, right? It's not
yeah,
just one detail, it's the whole picture of whatever that
yeah.
you're looking at and the cost associated with it.
Yeah. So
Yeah.
if you're listening to this, don't get that longer loan on the car and don't get the longer loan on the house, on the mortgage.
Yeah, yeah. For sure, for sure.
But man, yeah, I think that was pretty good. I mean, I'm not sure, was there anything else that you wanted to touch on with this or something else?
No, not really. I mean, I think you and I had a good conversation. It's interesting because I think a lot of what we discussed holds true for the current mortgage products out
Yeah.
there is, be aware, talk to the professionals, and learn, like, find out what you don't know so then you can feel empowered to make the next step. I will say too, we live in a day and age where there's so much information available to us online, which is amazing, but, a lot of times that information can be incorrect, and it doesn't
Hmm.
really replace having a professional in front of you. So whether that's a mortgage officer, right, or a realtor or somebody like that to help either guide you in what you're looking for information on for, or connect you with a professional who knows it is of the utmost importance. A lot of times when you're talking to a professional too, I find that clients have more questions than they thought they had. And you
Hmm.
you figure those out a lot easier when you're not
Yeah.
in front of a computer like this, typing in some general numbers and it's just gonna spit it out to you. So
Yeah. You
definitely
don't know
connect
what
with
you don't
people.
know. Yeah.
Yeah, connect with the professionals.
Well, and I think that's a big reason why we're doing this podcast is because, maybe sometimes it can be a little intimidating to talk to a professional and
Yeah.
to start that process or get out there. But, listening to something like this where we're in the business, two different perspectives, not perspectives, but, we're two different people, but
Mhm.
we're in the same profession and basically trying to help people make big decisions with the experiences and perspectives we have by doing because we do this every day.
Yeah, 100%. Or at least to be that connecting point for them to say, hey, I should probably talk to XYZ,
Yeah,
right? Like to get out
yeah,
of that bubble of just this is the news, this is the information. Every time you go online, something trying to get spit at you, get out of that and understand. Let me go talk to somebody who can give me the accurate information I need.
yeah. So
Right
I
now.
guess what I took away is that yeah, there are always going to be new products in
Yeah, that's for
the real
sure.
estate and mortgage game. Talk to a professional, listen to stuff like this, and you'll be able to be in a better position to make decisions. Is
Absolutely.
kind of what I get into it. So awesome, Julia. I think this was great.
All
Um,
right. So it's
yeah,
good.
yeah. Anything else you want to talk about?
No, not that I can think of. We got to figure out what we're going to talk about next time.
Yeah. Well, I kind of got a little bit, and one of the things I wanted to talk to you about for next time is, did you hear about Trump talking about giving people $2,000 on their tax returns?
Goodness, I did not. I felt like that was a loaded prop right there because this whole 50-year mortgage, that's exactly where it was proposed from. And again, it's like a little carrot, right? Monthly
Mm-hmm.
affordability, we're going to ease it.
Yeah.
And then it's like, but let the
It's
people
all these
understand the entire picture.
have you heard of Flex Seal?
No, I have not. Oh, like are you talking about the stuff that comes in a can that you
Yeah,
just
yeah.
like, that
You
stuff is
seen those
so cool though.
commercials, right? Like those people
Yeah.
who are like, "Hey, look at me! I'm on this boat. There's this big old hole. And I'm sinking it, but here's Flex Seal." And I
Save the
think that's
day. The party goes on.
yeah. And I think that's what all of this is it's all Flex Seal, and it's not really addressing the real issues, but, we could talk about that. Yeah.
Well, maybe next time too, we can even go into how we just don't have enough housing. Main problem is that we just do not have enough
Yeah.
housing, and especially here
Yeah.
in California, we've just kind of underbuilt housing for decades, and now
Mhm.
it's had its repercussions, right, on affordability and access and
Yeah.
whatnot.
Not to beat a dead horse, but basically also part of the research when I was looking at it, yeah, this product of the 50-year mortgage is gonna entice people because it's gonna have like that lower monthly payment
Hmm.
because people are always thinking short term. They're like, okay, yeah, yeah, it's gonna be interesting to some of these people, but what it's also gonna do is get more inflation into the real estate game and make
Hmm.
housing even more unaffordable because
Right.
is what you're saying, the real issue is just not enough housing. It's not the type of product to help people afford.
Hmm.
But in any case, we can talk about that next episode.
Yeah, sounds good.
All right, Julia, good talking to you, and I'll
Sounds
stop it
good.
here.
All right. See you next week.
See you next week.